Hey traders, welcome back. Today is Sunday, July the 9th, 2022. Heading into the second week of trading for the brand new year. We've got a lot of positions still open in our account. We did have a few obviously expire on us on Friday, but we've still carried over quite a few to this week. Let's go through those and then let's talk about what we've got on the agenda for this week. Fairly busy week ahead of us in terms of trading opportunities that we're going to take a look at. We do have our NQ trade that we just put on this evening. This is basically a cash secured, or excuse me, this is a covered call trade that's inverted, right? It's a covered put trade. I'm short one contract here of the NQ, which is the E-mini for the NASDAQ futures, and I covered it pretty much at the money at 15,530. Brought in about $1,300 of income in that, and it's not quite at the money, so I do have about 2 points, or about $100. It's $50 a point for the NQs. So I've got about a total of $1,400 profit potential in this trade. And this income, of course, is coming in regardless, no matter what happens tomorrow. And then we'll just see, obviously, where the underlying is, and we'll reset from there. But, about a 6.2, I think 6.2, 6.3% cash flow in one day on that. So I feel pretty good about that trade, and probably continue to cash flow that for a little while if it doesn't get called away from us tomorrow. Gas, we do have a position opening in Nat Gas. We usually don't see too much in terms of theta here before we get down under 10 days to go to expiration. We've still got 17 days to go. 23-cent move overnight tonight. That's a pretty big move, but we are still fairly well contained in our range here. Let me get this out of the way. Fairly well contained in our range here. It is bouncing around a little bit, but it looks pretty well contained here. There we go. Let's go one more. There we go. So fairly well contained inside of the range. Again, it is pushing up ever so slightly, but I think we're still fine on that trade. We'll talk about maybe enhancing this trade, our Nat Gas trade, on Thursday of this week. Our ES trade, this is also a trade that we put on tonight. Full iron condor, 1 DTE. We've had some tremendous success with those. And 45.65 is the short put. 47.06 is the short call. Pretty well positioned here. I think that we're fairly well positioned for a nice gain potential tomorrow. Brought in just under $600 of gross premium for $7,500 of capital. So pretty darn good ROI potential for a one-day trade. 6J, this is our Japanese yen trade. We've tried really hard. We always try really hard to have non-correlated assets inside of our portfolio. Obviously, currencies are one of those. We love the phrase that we like to trade things in the market, but not of the market, right? Things that don't necessarily correlate with equity movements. The yen trade was a really nice trade for us. We did have to extend it out. We had a big drop right there in the yen, and we took advantage of that. We were able to get the trifecta roll, which is we rolled it out for a little bit more time, we rolled it down for a little bit more safety, and we did it at a credit. And so it really made sense. It really enhanced the profit potential of the trade. About $2,900 into the trade, almost $500 of gross premium brought in on the trade. But we did have to roll it out for another month to get that. And so we do still have 26 days to go on that. But that's just basically a wheel trade, basically a cash secured put trade. We've got our RET trade. This is our longer term. We always like to have a 30 to 45 day index and condor moving inside of our account along with all of our shorter term trades. And this one is pretty well positioned still. We haven't had it on for very long, but it still looks pretty well positioned. Not quite the ROI potential of our previous one, which was about 25% in a 42-day window, I think. But this one is still pretty darn good. I think it's something like 16% ROI potential on the trade. PayPal. This is a Leaps covered right trade that we did, and our cover portion of the trade expired yesterday. We've been bringing in some really, really nice cash flow on this, and I continue to really like the analyses that I'm seeing from the major wire firms, the brokerage firms on PayPal. They kind of agree with us, our sort of belief that it has been overextended to the downside, that this is a true support level, and that it's looking to bounce higher. It's a Leaps covered right to the call side. So we'll need to be adding the covered portion of this tomorrow, Monday, We will do it again on a weekly basis, and something in that 190, 250 range. I don't know that that's the exact strike price we're going to use, but should bring in another $200 or so of income. So this has just been absolutely killing us for us. It is a little bit more expensive, Leap covered right, almost $4,800 into the trade. I usually like to keep these around $3,500 commitment, but it's an expensive stock, $187 a share stock. So anyway, $200 to $300 a week in income on a $4,700 investment. Pretty happy with that. We have the exact same trade going on with Apple. Leap's covered right, but it's to the put side. So it's a bear trade, and Apple has been accommodating us quite well here. We felt like it was overextended up here. It has pulled back a little bit. That has certainly helped our trade here. We did put this out for the covered portion of this trade. We put it out for a little bit longer than we did on the PayPal trade. So this is still in place for this week. $240 of extrinsic value still sitting in that trade. That's just been an awesome cash flow trade for us as well. GM, Ford, all of these dynasty auto companies have really been active as of late. And so we've had to be pretty nimble with this as the EV component of these companies get started rolling out. You're starting to see some activity in these stocks, some ATRs on these stocks that you hadn't normally seen. Unfortunately, fortunately, the trade looks pretty solid. Unfortunately, we've had to roll it out 12 days to get it that way. And so hopefully it continues to stay in our range. It looks really good right now, but we're going to need to keep our eye on that because 12 days seems like a really long time to be in a trade of this type with the movements that GM has had. BBig, again, very interesting play. Very excited to see if we could potentially get assigned on this. Again, you're talking about an opportunity here to play all of the major things that are in news today: the metaverse, crypto markets, NFTs. This is it. This is the granddaddy of all three of those. And so we'll see if we could get behind here. I do love it because it has pretty good volume for a $2 stock. It has weekly options, decent spreads, and of course, amazing IV. Just crazy good IV. So we'll see how that goes, but we've still got a little bit of time to go in BBig. Still 19 days on that. Essentially just a wheel trade, right? Mara is part of the whole cryptocurrency universe that has just been beaten up like crazy. Bitcoin is at about a 3-month low right now and continues to show a lot of weakness here at this level, and that's pulling anything down that really has any association whatsoever with cryptocurrencies or Bitcoin in general. But I think that at some point here, we're going to find an entry point that would be interesting to get long this. Mara, again, is an interesting one that has some really good volume. 9 million shares traded on last Friday. It's got weekly options on it. We go out to the January 21st. You can see over 100% IV in the stock. So all of that bodes really well for our cash flow opportunities on this. Should we get assigned? We're down here at 27. We've had to roll it a couple of times as we've continued to see weakness in this. So we'll just keep an eye on that. But would be interested in getting assigned those shares. We just want to make sure it's at the right price, right? We made a $20 bet. This was a $20 trade on Wish. We'll see how that pans out. We still have 40 days to go on that. Rivian, very interesting setup as well. We were able to get some, I think, amazing strike prices on this. We call this basically a super wheel trade where we would be committed to get short 100 shares at 102 and we would be committed to get long 100 shares at 55. And that's over this next week. That's just 5 days commitment to that trade. And you know what? Either way, I would be happy with either one of those outcomes. And even if we don't get assigned, put up about $900 and brought in almost $77 of gross premium. This is almost an 8% ROI for this week's trade. Well, we've been in about a week and a half, but still 8% ROI, even if we don't get assigned. So I really like that trade. Our DocuSign trade, we were assigned these shares at $1.85. Quite a bit higher than where we're at right now. We've done a really good job of cash flowing these. It was ugly on Friday, and it's knocked itself right back down to where it was when we initially got assigned. So it's really important that we hold this level right here. We'll see what tomorrow brings. I think that Monday is going to be a very important, very decisive day for DocuSign. I feel like DocuSign is a really solid company with really solid fundamentals that has been oversold at this level as well. But we're going to need a little help from the marketplace. If the market continues to sell off, it's not going to bode well for our DocuSign trade, but we'll just continue to cash flow this darn thing and bring in, again, a goal of about $250 a week, $1,000 a month. And if we can do that month after month after month, this number right here should take care of itself. So we'll just continue to cash flow it, guys. Sort of like a rental property, right? VIX trade, we said that we would love in this marketplace now to get long some volatility at 1750. And I don't feel that we're going to pop above 2450. This is technically a super trade, but I don't really want to get short volatility here at 2450. It's just more of a standard deviation thing saying that we're probably not going to hit that. And there was some good income potential on that. We've only had to put up $1,700 to do this trade until we eventually do get assigned on this trade. And so it's bringing in a nice little cash flow for us while we're waiting to get an assignment on that. ZW, this is our wheat trade. And we've got 12 days to go on that. Again, you need to usually be inside of that 10-day window for these trades to start really make sense for us in terms of theta erosion. But we're still pretty darn well positioned on this trade. There's not really any activity that we need to do, anything that we need to address on that. It's just kind of plugging along, doing its thing. BBY, let's talk about this one. This is Bed Bath & Beyond, BBBY, Bed Bath & Beyond. 5 days to go on this. This expired on Friday. It is just a technical setup. We put this on the day that Bed Bath & Beyond announced earnings. We felt like it was a little overextended here on the day that it reported earnings. I believe that it was this day right there. That it popped up and retraced right back down. And so we felt like, again, there was not going to be enough strength in Bed Bath & Beyond over the next week to push above 17. Looks really, really solid right now. Great ROI potential on this trade. We were still, even post-earnings, able to capture some pretty darn good IV on this trade. Put up $800 and brought in $100. So ROI looks really, really solid here. CVS, this darn thing is one of our bear market trades. We have had such amazing success with our bear market trades. Going almost over 3.5 years now. I was going to say over 3 years. It's close to 3.5 years now of bear market trades. And they have not only just absolutely killed it from an ROI standpoint, but in 3.5 years, we've only had 2 that did not work out, that didn't make money. And those were teeny tiny losses that we probably could have, in hindsight, adjusted and moved those into profits as well. So we've had some tremendous success with this. We just booked a nice profit on a bear market trade last week, but this CVS trade just continues to hang out here at these highs. It is not pushing higher, but it is hanging out at these highs. We got some time to go still on this. We got 12 days to go, so we'll just continue to let that work. The nice thing, of course, about the bear market trades is that it is really, really adjustable. And so if we need to adjust it, we can do that. But we've still got some time to worry about that. We do have an oil trade on that expires this week. We put this on last week, and it is just now breaking into the positive zone, breaking now into the profit zone. Really good. We always get great ROI potentials on the wheat trades and the oil trades, but they can be volatile. There's a reason why we get the ROI potential that we get, right? And that comes with volatility. But again, put about $1,300 into the trade, brought in over $200 in premium. Just really, really good ROI potential on the trade. We are close to the call leg of 81.50 here, but I think that if you look at it from a technical perspective, it still looks pretty darn good. I'm pretty happy with that trade. We may do a little enhancement to this trade on Wednesday of this week. We'll talk about that in just a second when we get into our action plan for the week. Q trades. We've got 2 different iterations of our 4 DTE Q trade going on right here. We've got one call leg that expires tomorrow on Monday, and then we've got a put leg that expires on Wednesday of this week. And so we're going to try our very darndest tomorrow on Monday to get an accompanying put leg attached to this Q leg right here, and we're going to try to get a call leg attached to this one. Of course, neither one of those trades would require any buying power, and it would just enhance the income potential of both of those trades. The income potential of both of those trades right now is crazy good, crazy good. 4,200 bucks into the trades, $1,100 of premium that we brought in on that trade. So both of those continue to look really good. I forget our numbers right now on our 4DTs, but I think it's something like 56 or 57 wins and 4 losses since we commenced them a little over a year ago. And so they continue to be pretty flexible in terms of if they need adjusted, we can adjust those. In fact, this adjustment, this leg right here, this January 12th leg, in fact, is an adjustment. So it continues to look good there, but we'll be working on those. And then last but not least, we do have corn trade, again, 12 days to go in that. It's pretty well positioned here. I don't think that there's any activity that we need to do on that right now. Looks pretty solid. We just need to let a little time go by. But again, $1,600 bucks into the trade and $190 of premium in on the trade. And it's really tough to get those kinds of ROI potentials on equities as underlyings. The commodities, they are a little bit more volatile. They do bounce around a little bit. The commissions on them are way more expensive than options on stocks and obviously equities themselves. But they're justified if we can get them to work for us. The return potentials on them are pretty darn awesome. So with that being said, let's talk about what we've got coming up here for the next week. All right, guys, actions for this week that we have coming up Monday, January the 10th. We don't have any major news items coming out that could potentially move the market, so there's nothing there to look for. Obviously, Monday is going to be a 0 DTE day. We're going to look to initiate a brand new 0 DTE. We are on a nice string of successes with our 0 DTE, so hopefully we can keep that up tomorrow on Monday. We're going to be adding, hopefully, to both iterations of our Q trades, and that should require no buying power, but it will obviously enhance the credits that we've received on those trades. We're going to look at initiating a brand new 4DTE SPY trade. We'll get into that again. We were able to book a really nice profit on our last one after we ended up having to roll it for a little over 5 weeks, I believe. And we ended up booking a nice profit there. And then in addition to the 4DTE SPY trade, we're going to look to reinitiate our credit strangle on IWM. We have had just some absolutely tremendous luck with that. We had to go 2 weeks for a little bit there, almost a month or so ago. We went 2 weeks in a row without initiating one of those, and it was just difficult to get one in that met our criteria. But again, our criteria for the IWM strangle is to bring in about 1% a week, 4% a month, 48% a year in cash flow. So 1% a week. And of course, the big thing with the IWM trade is that it's very adjustable. It's a credit strangle, a little bit easier to manage than a credit spread. In addition to that, we have Tilray, TLRY, which is reporting earnings before the bell. So before the open tomorrow morning, Tilray will be reporting earnings. It's got about a 15% implied move in the options right now. We're going to look to piggyback on whatever it does at the open or very close to the open, and we're going to put a trade on Tilray, or at least we're going to attempt to trade Tilray. So that's Monday's activity. Tuesday, January the 11th. Not a lot of news coming out that we need to be aware of on January the 11th. We've got Fed speak throughout the day. All day long, we're going to have Fed speak. You never know what's going to be said and how the market will interpret that. So that's something that we need to be aware of. We are going to initiate a brand new 1 DTE trade on an index on Tuesday, January the 11th. We've had some absolutely just gangbuster results with those. Those have been really juicy in terms of ROI potential and really easy to manage. We haven't had a lot of them lately that we've been able to take all the way to expiration. But even opening them up on the day before, closing them right at the open in the morning, we've had some good results with those. So we'll be doing that on Tuesday. We're going to be looking at initiating on Tuesday the first crypto trades. We've traded a lot of things in here that are crypto related. Coin, for example, is a mainstay for us here, but we've never actually traded the underlying cryptos. We're going to look at doing that on Tuesday, primarily Bitcoin and Ethereum. So we're going to look at accumulating a few positions in that. I'm going to show you how we do that with very little risk. Not going to put a whole lot of capital at risk in those trades. We're going to be looking at doing a little bit longer term iron condor on gold on Tuesday. We're going to look at trying to find a couple more pairs trades. We've had some really good results with pair trades, but we haven't been able to find a lot of them. And so we're going to look at initiating some new pair trades on Tuesday. And then on Tuesday, we are going to come back to our old friend, that's DWAC, DWAC. We've had some great profits off of that trade. It is the trade that keeps on giving, and we're going to look to reinitiate that. Again, we had a great one last week that was a nice, I think about a 10% return on that trade. We're going to look to do it again this week. So that'll be Tuesday's activity. Wednesday, from a news standpoint, we do have CPI numbers coming out an hour before the market opens up. We've got oil inventory numbers coming out an hour after the market opens up. And so on Wednesday, of course, that will be another 0 DTE day. But we're also, in addition to our 0 DTE on Wednesday, we're going to look at potentially enhancing our current oil trade and seeing if we can maybe balance out the delta on it a little bit, just depending on how oil reacts to the oil inventory numbers release data. And then also on Wednesday, we're going to look at doing a iron condor on Tesla. Tesla has earnings coming out on January 26th, but Tesla really doesn't move necessarily off of the earnings reports. It really moves off of its sales numbers. It's always already reported those numbers. They were gangbuster. They were awesome. And so we're going to look at taking advantage of that. Tesla has sort of settled a little bit in its trading range right now, but it still has great IV. So those are the things that are on the agenda for Wednesday's trading session. Thursday, January the 13th, we do have jobless claims coming out an hour before the market opens up. We've also got sales numbers coming out for corn, wheat, and soybeans an hour before the market opens as well. And we've got trades going on in most of those commodity softs. And so we're going to look at how those impact our trades, see if we need to make any adjustments on those or any enhancements to those trades on Thursday. We've got nat gas inventory and sales numbers coming out at 1 hour after the market opens up on Thursday. We've got a nat gas trade going on right now as well, so we might have to enhance that trade a little bit to balance it out. And then we do have a little bit of Fed speak in the afternoon on Thursday. So Thursday could be an active day, could be a busy day. We do have a couple of other interesting things on Thursday. KBH, which is a home builder, is reporting on the 12th after the closing bell. So on Wednesday, KBH reports their earnings. We'll see the results of that earnings report on Thursday morning, right, as the market opens up. So the home builders have been an interesting area to look at. And one of the things that we're looking at potentially doing is trading the XHB. That's the home builders ETF on Thursday. So putting a trade on, seeing how KBH reports, what it does to the other home building stocks, and trading that all in one lump basket with the XHB. So that'll be a trade that we're looking at initiating on Thursday. We're going to do another 1 DTE trade on an index. Could be the S&P. Been doing the NASDAQ mostly as of late. That's where the meat has been in terms of premium potential. But we'll be doing another 1 DTE on Thursday. We have DAL, D-A-L, that's Delta Airlines. They're reporting before the bell on Thursday, so we'll probably be looking at doing a trade on them on Thursday. And then, as I mentioned, we do have nat gas numbers coming out on Thursday, and so we do have a nat gas trade going on already. We'll take a look at that and see if we can potentially enhance that trade and add to it. Friday, January the 14th, we do have retail sales numbers coming out 1 hour before the market opens up. We've also got industrial production coming out 15 minutes before the market opens. Friday is going to be a 0 DTE day. We're going to look at obviously focusing on that through the day. And then on Friday as well, we've got a lot of the bank stocks reporting. We've got FRC, that's First Republic. We've got WFC, that's Wells Fargo. We've got C, which is Citibank, and then we've got, and those, all three of those are reporting before the bell opens on Friday morning. And then we've got BLK, that's BlackRock, which was reporting after the bell on Friday. So once again, rather than trying to pick and choose which one of those we're going to look at trading, we're probably going to put a trade on Friday with the XLF. That's the ETF that tracks the financial sector. It's been absolutely on fire here as of late. This is a heat map right here of the first week's trading in the marketplace for the new year, 2022. And you can see the only places that have done well are the financials, energy, and a little bit in the aerospace area. But it's really been financials as interest rates have been going up and bonds have been getting hammered. The margins increase for banks. And so that's been good for them. I would anticipate that is going to probably continue for them. And so we're going to look to use the XLF on Friday to put a trade together there. So that's a little review of our overall positions. It's a review of what we're going to be doing this coming week, or at least what our plan of action is. We will see you guys in the live trading room here in about 11 hours. When we get started. So have a good rest of your Sunday evening, guys. We'll see you in the trading room tomorrow. Take care.